afternoon to all our viewers. You're watching Bloomberg Quint Live, India's first digital live streaming business news service. You're watching Countdown. The markets this afternoon have moved towards the lowest point of the day, but let's quickly take a look at the headlines before we give you a good market wrap-up for trade this afternoon. Markets continue to trade with losses. The Nifty falls below 11,400. PSU banks are bucking the trend. The Nifty FMCG index is the top sectoral loser. The index is now down 6 of the last 7 trading sessions. And the currency continues to trade around record lows. Investors now focusing on macro data to be reported later this week. And ArcelorMittal gets at least another day to repay Uttam Galva and KSS Petron's lenders to fit the eligibility criteria for SR Steel.
Well, viewers, thanks for tuning into Countdown. My name is Neeraj Shah, and the markets, now trading almost at the lowest point of the day, or at the lowest point of the day. So yet another day of pressure, about 0.5% lower for the Nifty 50. The mid caps and the small caps too would have now come off and trading probably at the lowest point. About a third of a percent or slightly less than 0.5% for both of the key indices as well, and the market breadth would be bad. Just bring up Europe once. The market breadth that I was talking about, now close to 1:2 in favor of the declines. Europe is not doing all that poorly, so this is almost similar to what happened in trade yesterday, but in the world markets were not all that unpleasant, but we had our own problems to deal with. Bring up the intraday of the rupee before we get in what the Nifty 50 heat map is looking like, just to mark what the currency is up to in the session today. Remember, it was a morning or a day of some bit of recovery that we'd seen because the rupee was off the lows. Wonder if that's changed a little bit. Some bit of a pullback. Currently at about 72.45 for the currency on an intraday basis. So off the highs of the day, the currency as well. But bring up the heat map and just try and show you what's moving and what's not. It's a complete mirror image. This was the quantum of green on the screen has more than halved from what it was at the start of the trading day, and a lot more red. Consumption taking a bit of a hit. Titan, ITC, you also put in a UPL out there, which is down in the red today. Z Entertainment down about a couple of percentage points. Hero MotoCorp down about a couple of percentage points. So a fair bit of losers amongst the heavyweights. We have an HDFC Bank which is corrected. HDFC is corrected. TCS is down about 1.5% too. Kotak Bank is down about 1%. So it's a clutch of heavyweights, including ITC, which are pulling that pressure on the index. I don't see Reliance among the list of losers, but Reliance has hardly any gains right here, about 0.2%. So hardly any moves in Reliance as well. And look at the list of gainers, save for Infi and SBI, which have about 1% kind of a gain. We don't have any heavyweights which are participating in a meaningful way, and which is why this pressure. Bank Nifty is not as lower as the Nifty. Keep that at the back of your mind. But pressure on the large caps, I doubt that the mid caps are devoid of this pressure.
They're not spared actually, Neeraj. So it continues from yesterday's pain, and today's session also sees that pressure building up on the mid caps and the small caps, and particularly some stocks. Before I go on to the losers, I want to highlight some stocks which have actually managed to hold on and have substantial gains in a falling market. So quickly talking about a few gainers, we've got stocks like a Dredging Corp, a Reddington, and an ILNFS Investment Managers, which is doing well. Remember, yesterday the entire ILNFS group stocks, they were under pressure. Today there seems to be about a recovery coming in. Dredging Corp, on the other hand, there has been some new murmurs in the market regarding a stake sale. The stock is buzzing on that, 8% higher, and Reddington up about 7.5%. Aside from that, you've got stocks which are gaining on the back of heavy volumes as well. So stock like Varun Beverages, it's come off a bit, keeping in mind the overall pressure building up in the market, but the stock's still up about 4%. 90% increment in the volume, the average that we've been seeing over the last few days. And a Page Industries, which is holding ground by about 4%, that sees a 63% increase in volume on the back of that kind of pricing activity. Amongst the bigger losers in trade today, smaller names, you've got an L&T Food, which is down a good 10% in trade, and all of this in the back of heavy volumes. You've got other stocks like a Hathway. Hathway, the last few days have been particularly good. Last 3 trading sessions, actually, the stock has closed with gains of more than 5%. In fact, closer to about 16-17% of the last 4 trading sessions. Today gives back about 6%. And a Sun TV seems to be losing ground by about 3.5%. But it's not just about these stocks. There are many more stocks in the broader market that have witnessed some amount of selling pressure on the back of volumes. But we'll get to that in a short bit. But let's take a quick look at what's happening in the futures and options space, where the OI build-up is coming about. Darshan is joining in for that. Darshan.
Yeah, so basically 11,400 was the big support that the market was looking at. That's been broken because 11,400 to 11,600 was the broader range. The Nifty fresh short positions are taken, open interest build up of 2.5% on the short side. The Bank Nifty is even fallen significantly here. Look at the open interest build up of 25% on the short side. So there is heavy shorting that is happening. If you're looking at the Wix has managed to cool off significantly. It's down to almost levels of 15. But where are positions being built? Now, if you're looking at this chart, you can see that, at 11,400, currently there is a very, very high open interest build up on the put side. The Nifty has just gone below it. If this continues on a sustained basis and closes below that, there will be severe unwinding that will happen. On the higher side, there is resistance at higher levels. Bring up the open interest distribution chart and you can see what's happened in trade today. Look at the put call writing that's happened. 11,500, a significant amount of close to almost 10 lakh shares have already been added at that level. Look at the 11,400, there also call writers have become active. 11,400 put writers are active. If the market falls even further, expect the Nifty to slide below the 11,300 at a very, very brisk pace. That's what I can see. Couple of stocks I want to point out. Page Industries, for one, is seeing high open interest build up. On open interest to build up of 5%, the counter is up almost 4% in trade. The other counter I want to point out is the other counter is Chennai Petro. Counter is down in trade, but the open interest build up is much higher in trade. Let's pull up the next stock, and that is Mindtree. Open interest build up of 12% on the long side. It's up 2%, trading at record highs, and Hexaware has bucked the trend. Open interest build up of 10% on the long side. So Neeraj, that's what I'm seeing. 11,400, the big support level has been broken. We need to watch out on a closing basis. If it closes below that, there will be severe unwinding that will be happening.
All right.
Watch out for that.
Yeah. Thanks a lot for that, Darshan. So that's the F&O snapshot there. There is some pain that is pretty eminent in the markets. Let's focus a little bit more on what's been happening in terms of the macros. In the last few days have not been the best for Indian macros. A weakening currency, rising yields, surge in fuel prices. Investors don't seem to be catching a break from this. India will also be reporting numbers for industrial production later tomorrow and the inflation numbers. So let's discuss all of this and more with Aditi Nair, principal economist at ICRA. She's joining us on the phone line right now. Aditi, first off, let's talk about the expectations from the numbers that we're going to be getting tomorrow. What is your sense? Because as per Bloomberg estimates, the month of August is actually supposed to see a dip to about 3.78% on the inflation front. And if that comes about, then what do you think the RBI's next stance is going to be? Because they've been, targeting inflation all this while, but now with inflation under control, and you have the double whammy of the currency and what's happening on that front, what do you think the RBI stance could be?
Thank you. Our forecast for the CPI inflation print that will come out tomorrow is actually 3.8%, which is in line with the poll result that you mentioned right now. And after a gap of several months, the CPI inflation is expected to fall below the 4% medium-term target of the RBI and the MPC. So by itself, that is fairly significant. And part of the reason for that is the base effect as well as seasonally weak food prices. And whether, those will sustain going forward or not is obviously going to be one of the biggest questions facing the MPC when they meet early next month to review monetary policy and really take another decision on the rate action. Now, in the meantime, while we're going to get this lower than 4% inflation figure after a gap of several months, a lot of the inflation risks that have been highlighted previously by the MPC have either remained or have intensified in the interim period since the last policy meeting took place. And two of the main risks, of course, are the fact that crude oil prices have rebounded fairly significantly. And we're not quite sure how much more upside there is to crude oil prices, depending on what happens in terms of geopolitical developments, particularly the extent to which sanctions on Iran actually cut out a big supplier in the oil market. And the rupee, of course, is one of the worst performers in Asia in this fiscal year, or even in this calendar year if we have to look at it from January. And eventually that is something that is going to feed into not only the WPI inflation, but also eventually into CPI inflation. So whether the MPC sees these developments through the lens of the impact that rupee depreciation would have on the outlook for the currency, and therefore chooses to take a rate hike in October itself, or whether they look at the overall trajectory of CPI inflation with reference to the fact that the August number is going to fall below 4%. That remains a question mark at this point in time, whether we're going to get a third back-to-back rate hike in October itself or not.
You mentioned crude oil prices, and now with talks of states cutting down VAT, this is going to cost. This is going to bear a cost for the government in terms of the fiscal deficit, and that will reflect poorly on the currency as well. So, isn't this a dichotomy for them when they're trying to do one thing, and if the government does the other in terms of the fuel price, the pressure on the rupee still keeps accumulating?
So let's look at it in two separate baskets in terms of the fiscal impact. Essentially, Government of India earns a fairly fixed excise duty on fuels, and they have indicated, informally that is unlikely to be cut. So as of now, we are not expecting there to be any impact on the Government of India's fiscal balances, unless they eventually choose to cut the excise duty on fuels, which we don't think is a likely scenario. On the state government side, the VAT that they levy on fuels like petrol and diesel is ad valorem in nature. So as the prices of fuels have gone up, either because of higher crude oil prices or because of the rupee depreciation, per liter of fuel sold within a state, their tax earnings have actually increased over the course of this year. To my mind, they are actually in the first 5 months of this fiscal, which is till August 31st, the state would have been sitting on a fairly high revenue growth of revenues arising out of VAT on fuels like petrol and diesel. Now, in the rest of the year, if they're going to choose to cut some part of that VAT that they're earning, I think that there will be a notional revenue loss from the level of earnings that they would have had they not made this cut. But they will still be looking at revenue growth being positive. So as compared to last year, they will still be looking at higher revenues on POL collections than what they would have had last year. So it's only the increment which is going to get squeezed by these VAT cuts. That is my preliminary expectation.
Aditi, good afternoon. Neeraj here. When speaking to a bunch of your peers, and everybody seems to believe that because of the macros, to the currency fall, it is almost certain that irrespective of the inflation print and how good it may be, or however good it may be, we will see the RBI make a move come October. Where are you on this argument?
So I would, of course, like to see how far below 4% the CPI inflation trend falls tomorrow, Neeraj. But having said that, in any case, with what has happened globally and with the macros, the likelihood of a rate hike has gone up significantly in the last couple of weeks than what we would have assessed right after the August policy. So as of now, chances are leaning more towards a third back-to-back rate hike in October rather than a pause. This is obviously going to come amid non-unanimous voting. I'm fairly certain of that. Depends to be seen how many of the MPC members think that higher crude oil prices and the rupee depreciation are enough to change their inflation trajectory forecast as compared to what they had indicated in August, when we still don't have so much clarity on factors like what will be the final impact of MSPs on food inflation.
Okay, Aditi, thanks very much for joining and really appreciate you taking out the time. That's a quick take on what is expected tomorrow in terms of the inflation numbers. Remember, the IIP numbers for the month of July are also expected tomorrow, and the Bloomberg poll expects a number of 6.5%. But a lot of factors to keep an eye out on when we talk about what the RBI is going to do this time around for their monetary policy.
Yeah, I mean, I don't know, the camp is divided, but almost everybody seems to believe that, at least Sajid seemed to believe that it's a certainty that we'll see some rate action coming in from the Reserve Bank, even though it was an extended pause earlier. Yeah,
a few weeks earlier we spoke to Jonathan Garner, and he actually applauded the RBI for taking preventive rate hikes ahead of time.
Yeah,
so whether they continue that and it probably forms a base this time. we'll have to wait and watch.
The commentary too becomes very, very important. By the way, some flashes on your screen. Just shifting gears and moving on. The Supreme Court has decided to hear all pleas related to stressed power assets. The Apex Court has decided to club all the ongoing cases and put a stay on all NCLT proceedings till at least the 9th of November when it hears RBI's plea. Arpan Chaturvedi now joins us on the phone line with more. Arpan, what are you learning?
That's right, Neeraj. So there were three sets of companies that were in front of the Supreme Court challenging this circular. There were power companies, there were sugar companies. So there were three sets of companies that were in front of the Supreme Court. What the court has said is that various proceedings that were pending against these companies in the High Court, the Supreme Court has said that it will now hear all these challenges together. And because of that, what the court has said is that the February 12th circular of the RBI, with respect to these particular companies, that has been stayed. So no action can be taken against these companies on the basis of that circular until, of course, the court hears it or the further orders of the court.
Okay. Arpan, thanks for getting us those updates. We'll also try and get in Vishwanath Nair on this conversation too. But this is interesting. I think from what I heard Arpan say, until the November 9th, till the Supreme Court hears out these proceedings, and which is immediately after Diwali, I might add. Until then, stay on all NCLT proceedings. This is interesting. For power companies, yes, but I think for some of the other spaces as well, important, but more importantly for the power companies and the power assets. No insolvency proceedings under the Feb 12 circular. This is interesting. This is very interesting stuff. Do we have Vishwanath? Because I think it'll be important to get a perspective from him as well on this. But this is, well, there will be some further talks on this during the course of the day, and the website will have some more updates on this particular issue as well. Okay, let's move focus to corporates. The rupee has been one of the worst performing currencies in Asia this year. While the depreciation has benefited certain spaces, there are companies which will be impacted due to their exposure to the dollar-denominated debt. Century Plyboards is one such company. At least one brokerage house seems to believe that Century Plyboard would be one of those that could get impacted negatively. Let's discuss the impact of this weakness with Mr. Sanjay Agarwal, the MD and CEO of the company. Viewers would remember that about a couple of months ago, Mr. Agarwal had come in and spoken at length and very beautifully about how the business trajectory for Century Ply looks like over the next 2 to 3 years. Mr. Agarwal, thanks so much for joining in. Does this in any way hamper what could have otherwise turned out to be a decent run, this exposure that you have to dollar-denominated debt and the weakness in the currency?
Actually, till last year, our raw material imports were much higher than now. In last about 1 year, a lot of logs import has reduced. So presently, to our top line, the total import of raw material is only to the tune of about 15%. So at the difference of about say 10% in currency appreciation, the impact should be about 1.5% on our EBITDA. But what we have taken certain actions is that we have been able to increase prices of different items. Some prices about say maybe 1%, some prices maybe up to 2%. We have taken an increase. So we think that there may be a very slight impact which we will be able to probably correct the next time we see our data. But according to us, we have actually corrected and it should not have any impact on EBITDA till now. But still it might have a small impact which we don't notice right now.
Just a small follow-up question. What's the percentage of the quantum of raw materials that you import currently, Mr. Agarwal?
Yeah, currently only 15% of our total top line. So as a part of our raw material cost, if we say the imported raw material cost is about 37% is the total raw material, and out of that imported is only 302. So that's about maybe 45% of the total raw material is actually imported.
All right. Sir, do you follow any Sir, do you follow any particular hedging strategy on your dollar-denominated debt that probably protects you from this kind of currency volatility right now? What is in place at the company? Or are you significantly exposed?
Yeah. No, earlier we always had a policy of non-hedging. and we found that the hedging cost was actually more than the rupee lost against the dollar. So we always mostly benefited, except sometimes. This time, yes, we were caught a little unaware, but we booked at the level of about 69, 68, 90 or something. At that level, we booked most of our exposure. So today, out of $27 million, $17 million is booked, and only $10 million we are exposed. But Century Plywood is exporting about $14 million of goods every year. So we will get that kind of a natural hedge within the company, because $14 million export will get the benefit of the increased dollar, which would have come as an extra probably profit to us, but it's a natural hedge to us. So we are really not so bothered.
Any margin?
$17 million we have covered till now.
Okay. Any margin implications, even a minute amount or no?
Sorry, I could not get you.
Any margin impact?
Margin impact is because of this. I had just explained last time, just little before, that the percentage is 15% of raw material is actually from the top line is being impacted, and about 10% is the depreciation. So 1.5% should have been the margin impact. But then what we have done, we have been able to increase prices of different things. So there may be some margin impact. Yes, I cannot deny, which we do not see at this moment. Maybe in certain item, some mistake we are making. But the margin impact will not be high. It will not be 1.5%. It should be lower, much lower than 1.5%. So
Mr. Agarwal, there is a brokerage note which, I mean, of course, yeah, I would believe your numbers, but the brokerage, are you saying that these numbers are way off? Because they are saying that about 50% of raw material imported, yes, which is a slight deviation to what you said. But I think what they are importantly saying is that they believe that there is inability to pass on prices, which again you are countering, and their margin calculations are 2.5. You are saying it is not even 1.5.
Yes, because you see, they probably are working on a data which is much older. Earlier, our imports were much higher, which have considerably reduced in last about 8 to 9 months. They have considerably reduced, because one product we used to sell, we were the biggest in India, is the face veneer, and we used to import a lot of logs into India. Slowly, most of the countries have actually stopped exporting logs, and so our import of logs into India has really reduced. And that is the reason our exposure to foreign currency has reduced. And we are now ourselves importing just the face, and we are not marketing that finished products in the country also. So that is a big change in our whole portfolio also. And that's how probably that an analytical house has probably given a report which is little old. It was right earlier, but not now.
Right. So just to get a slightly a more forward outlook from you, just talk about your volumes and your overall in various segments, and the realizations that you see post these cost increases and these prices increases that you've undertaken.
As far as plywood is concerned, I will talk segment wise. So as far as plywood is concerned, of course, we have taken the increases, and the plywood volumes have increased by about 7.5%. It's not up to what we were expecting, but in the present circumstances, I will not say that it is bad. But what I see as far as the market is concerned, and the way people are now looking at us, the dealer, the sub-dealer, the retailer are looking at us, we are getting inquiries. So that means I find that there is some movement in the market, and people are getting more interested in our product, which earlier, whenever we approached them, they said no. As far as our decorative division is concerned, we have been able to take a mild, small price rise, have not been able to really pass on, but then that is the division where actually we have a lot of exports, so we are quite shielded as far as the increase is concerned. The growth in decorative division is very good. It's above 15-16%. So our MDF, the growth is again in MDF, growth is excellent, but the MDF market is going to be little slow because there is too much of production is coming into India, and we expect that MDF may be a little slow for some time to come, but that's okay. Every industry, I think the same thing happens. Initially somebody comes in, he makes money, and after that a lot of competitors will come in. It will take some time to settle down, but yes, it will happen. The future of MDF, the MDF is the future rather. So whoever has come in, I think within a year or so, I expect that total quantity being manufactured in India will be consumed, and then we will have a much better market.
Got that. Mr. Agarwal, thanks very much for joining us. Really appreciate you taking out the time and clarifying that for us. So the management categorically saying that the impact for them on the margin side is going to be not more than 1.5%. They are hedged already for much of their exposure in terms of the dollar debt at a rate of 68.9. So there's not much of an impact on that front, and also that they have managed to increase prices of products across various segments, which pretty much shield them from any further downside as well. So the stock in the last 3 months, though, has not done much. Today's session is managing to hold up at the peripheral, up by about 1.76%.
Well, let's get back now to the story on power assets, where the Supreme Court has decided to hear out all pleas. Vishwanath Nair now joins in with more details and more clarifications as well. Vishi, what does this do?
So a bunch of things. On the 27th of August, the RBI has set this deadline of 6 months under the February 12th circular. They said you resolve these cases outside the NCLT, or told all the banks to do so, or if you fail to do so by the 27th of August, within the next 15 days, you file an insolvency petition. Those 15 days end on the 13th of August, and today is the 11th. So with 2 days to spare, a number of the cases which actually defaulted on the 1st of March would end up eventually at the insolvency. And now that the Supreme Court has said that you can't proceed with insolvency against these companies till we hear the matter and we decide and give you further instructions, you will not see any insolvency petitions move against these companies. So that's big as far as power goes. But Arpan, our colleague in Delhi, the Supreme Court says that it's also applicable for companies from shipping and sugar, which are currently have cases pending at the High Court at various levels of hearings, and even those companies, only after the Supreme Court gives any further instructions to the banks and the RBI, can insolvency petitions move. So that's pretty big, because as we know and as we have reported, nearly 60 companies were to face insolvency petitions by the 13th of September. So it's unlikely that a lot of them will face insolvency now that the Supreme. We are not entirely sure how many companies get exempted because of the Supreme Court order today, but for sure there'll be quite a few amongst them.
Does it give some breathing room to the banks as well? Because there were some accounts which were almost on the verge of resolution, but there were a few tweaks in terms that had to be done, and for them to take such big haircuts and go into insolvency, probably that gives them a little bit of a breathing.
It gives them that bit of sort of moving room, because what happens is they'd asked the RBI to give them some time, but the RBI had refused to consider any kind of extension on the 6-month period. So that obviously will work in favor of the banks, because the next hearing is only in November. So they have quite a bit of time to close any of the pending deals and at least get some of the cases out of the way. And then probably, even if the Supreme Court says move on with insolvency, number of cases will reduce.
But they can't backdate it?
They can't backdate it, no. I mean, once the resolution is done, it's done, right? So you can't really change that.
They have that room too.
Yeah. But remember that the Supreme Court has said status quo. So, of course, we'll understand from the lenders as to what status quo exactly means. As of now, we are understanding is that no insolvency petitions. But whether that affects the current resolution schemes or not, that's something that the lawyers will have to clarify later.
Yeah. Maybe indeed a happy Diwali for a few people, because the November 7th or 8th, and November 9th is when the first of the hearings will happen. We don't know if that will even be the resolution, but thanks Vishi, for joining us and putting that into perspective. Well, now ongoing matter, and continues to have some twists and turns, legal or otherwise. Okay, before we get in our experts, I think a stock in focus is JSPL as well. Reported highest revenue ever in FY18, with the consolidated top line growing at about 23%. ICICI Securities has put out an analysis on the company's annual report. Yatin Mota, who went through the note, is here with some of the key highlights. Yatin, good afternoon.
Afternoon, Neeraj. Of course, the stock was buzzing, has come off with the markets right now. But, the key reason was the annual report analysis that the brokerage sent out to clients. In fact, if you look at JSPL, their FY18 EBITDA has been looking at a strong growth, total EBITDA of close to 10,600 rupees a ton versus a figure of 8,660 last year. So good growth in overall EBITDA, and costs also have been controlled here. So the overall realizations have went up for the company, apart from the steel volumes picking up because of the increasing utilization at the Raigarh plant. More importantly, the brokerage points out that the new Angul plant, which is of the capacity 6 million tons per annum, that is expected to hit a capacity utilization rate of 90 to 95% moving forward. And probably because of this, there will be a substantial amount of addition on the earnings front. Apart from that, they recently concluded a QIP, and the total QIP proceeds, 40% of that was parked as working capital requirements as the company scales up on the volume front. Also, we have seen the overall deleveraging to the tune of 2,300 crores in FY18, and ICICI Securities believes that this is one of the strongest play in the steel sector when it comes to the deleveraging bit. And of course, two red flags in the annual report that the brokerage points out is: number one, the foreign currency term loans will see an impact because of the weak rupee, and probably the interest payouts and the adjustments on the balance sheet would have to be made, number one. And number two, the increased activity on the related party transaction has been seen on the negative, surprising side, with the transaction increasing for the group entity, which is Jindal SAW, a sister concern of the promoters. So clearly, these are the few highlights that ICICI Securities has given as far as the FY18 annual report is concerned, and probably because of which the stock is buzzing. And this apart, we also have the pellet prices, which have increased smartly to almost 8,500 rupees ex Raipur is what reports are suggesting. So, probably on the back of that news also, we have JSPL buzzing in trade.
Okay, Yatin, thanks very much for that. Though it's sort of petered off from the highs of the day, in line with what the rest of the market is also doing and the pain points that we're seeing across the board. On the index, though, there's a very sharp cut that's come in. We, at the start of the show, we were still hovering closer to 11,400. Now at 11,321. So the cut just gets steeper as we speak. But remember, Neeraj, in fact, our technical guest in the morning had given a sell call on the index, and it's exactly where the target price of that sell call is. So it was at 11,330, in fact, below which, if the close comes about below 11,330, the pain could just exaggerate.
Yeah, and the Nifty Bank to Devina, if my memory serves me correct, the 100-day moving average is about 150 or 200 points away. So no immediate support for the Nifty Bank as per the technical levels, key technical levels. But, well, could there be more pain in store? I think that's the question to ask.
Free fall or not?
Let's ask our experts. Ashish of Kiran, Jadhav and Associates with us on the show, as is Amar Singh of Angel Broking with us on the show. Gentlemen, both of you, good afternoon. Thanks so much for joining in. Ashish, let's start off with you. A quick thought on what trade would you initiate right now? Whether it's futures or options, would you initiate a short on either the Nifty or the Nifty Bank?
Definitely, I would want to go with Bank Nifty, because Bank Nifty is looking very weak. Currently, the most important level for the Bank Nifty was 27,150, which has already been broken. So, fresh short position can be taken. And in this case, the stop loss should be kept at 27,175. And the target which I am looking at is not an intraday trade, but it would be a positional trade for the next 2 days. And the target is 26,800.
I just want to pull up, the Nifty, which is since the high that we had seen of closer to 11,700 when it had touched those levels. We're off significantly from those levels. Amar Singh, just want to come to you. After we've already seen a free fall of 400 points, do you still see sense in going short at current levels?
Yeah, I would say that we've been saying that Nifty is displaying weakness in the short term, and that's what we are seeing the market also, the way Nifty has corrected the last couple of days. However, I would say that on the downside, close to 11,280, 290, that should act as an immediate level of strong support for Nifty. So there is a possibility, and even if I look at the weekly chart, somewhere or the other, the support comes around those levels. So there is a possibility that 30-40 points below Nifty should meet with support there, and also those who are on the short side, they would witness some short covering. So that could be a level where Nifty could bounce back. But I would say that looking at the short-term charts clearly reflects that the upside is definitely capped, and the high that we had witnessed on 28th of August, that top has been made. So on the upside, Nifty is definitely going to meet with selling pressure anywhere between 11,550, 600. That's going to act as an immediate level of resistance. Whereas on the downside, I would say 11,280, 300, that should act as an immediate level of support. Yes, If Nifty starts trading below 11,280 levels, then we could see some real sharp correction in Nifty towards 11,000 level as well.
Okay, the worry is the pace at which this drop is coming about. The start of the trading session seems to be fairly lackluster, but then towards the end of the trading session, the pace at which the index drops is a little bit worrisome. 11,318, it's already dropped 17 points since the last time we took a check. But let's go across and find out some more stock strategies that one can probably look at trading in. I believe more strategies on the sell side than on the buy side right now. Ashish, let's take your two calls. You've got a sell on BEML and Bata.
Yes, currently Bata is trading at around 1022 levels. A strict stop loss should be kept at 1033, and the first target which can be seen on the chart is 1009, and the second target which can be seen on the chart is 1000. So Bata is somewhere huge open interest has already been opened, and the stock is showing a strong weakness. So I believe that the first target should be reached today itself, and the second target would reach tomorrow. The second stock is BEML. If we look at BEML chart is also looking very weak. Currently it is trading at around 753. My stop loss is 760, and the first target is 741, either today or tomorrow.
Okay, got that. Amar, what are your strategies? You got one buy call on KPIT and you're selling Bharti Airtel.
Yeah, that's correct. KPIT, what we see is that this stock continues to trade higher. Yes, we witnessed some selling pressure today, but overall, the trend technically for this stock remains positive, and also the depreciation of the rupee is somewhat helping the IT space as well. But we'll have to watch out. So any pullback in this stock towards 307 levels can be used to initiate a long position with a stop loss of 302 and a target of 321. And the second stock to look is a sell on Bharti Airtel. See, what we are witnessing in Bharti Airtel is that somewhere or the other, the stock is meeting with stiff resistance around 390 levels. And also, it's been in consolidation, and we've seen a technical, I would say, sell-off which is happening here as well. And the medium-term charts as well as the long-term charts, they really don't display too much of bullish momentum in this particular counter. So one can sell Bharti Airtel. So this is one stock one can look at selling around any pullback towards 385, 387. That can be used to initiate a short position with a stop loss of 394 and a target of 369 on the downside.
Well, look at Titan. That's down about 4% today, but more importantly, it's back to those 825 levels. Now, remember, the stock had collapsed when this whole news of RJ selling off some stake within the company came about. It had gone down. If you pull up the last 3 months chart or thereabouts, or this year's chart, you will see that it had a vertical fall from those highs of 990 all the way to 810, and then it rebounded a bit. Now it's moving back to those levels which are close to the lower levels that we've seen in the year thus far for Titan. It's hardly given any returns for a premier consumption company showing growth. Titan has not been able to deliver returns, but more importantly because it's now having these series of crests and troughs that are coming in, and the movements on almost any single piece of news is fairly exaggerated. Right now we don't even have news, but the fact that a bunch of these FMCG names and staple names and consumer names are correcting, and Titan is no different. The last 3 months, 8.5% down. This year, 3% down. The last 1 month chart, if you look at it, it's come off quite rapidly from those 910 odd levels. So that's about a 10% fall that we've seen in Titan already. So across time frames, it's not been able to create wealth, and there is weakness at almost every high level. They may want to expand the jewelry business. They're saying that by FY20 or 21, I think I read one of the social media posts which said that 60% of their overall revenues will come in from the wedding jewelry segment. So doing all of those pieces, but somehow the confidence in the growth rates for Titan as a company probably seems to have shaken off a bit, and the high valuations don't do justice either.
It's interesting because the jewelry market itself right now seems to be in a little bit of a lull in terms of the offtake, in terms of the sales that are going across. And if you see that, you'll probably see that as a common thread between most of the jewelry makers. Even for that matter, PC jewelers, the stock's not doing anything much over the recent past. So, I mean, if they're saying that, and they, so you probably got to see what the market mood as a whole is in the industry that it operates in. And if it's saying that about 50 to 60% of volume and sales expected to come from jewelry, the trajectory of the industry itself.
Yeah, circumspect for sure. PC, of course, has a lot of issues of its own too. But the larger point being that jewelry sales aren't exactly doing
in the pink
anything
of health.
In the pink of health, yeah, as you say, or in the silver or the gold of health, if you can use that term. But just as a trading play, Amar, Titan, is it too late to initiate a short?
Yeah, looking at, if I look at Titan on the charts, what I see is that somewhere or the other there is there's selling pressure has been, I would say, intensifying. And if I look at the charts, even the long-term charts as well as the intermediate-term trend, that's clearly very strongly on the negative side. And the short-term trend also remains bearish. So yes, any pullback can be used as a shorting opportunity, because on the downside, if you look at it, in the second week of July, it had made a base of around 800 levels. So there is a possibility that it could retest that level. But ideally, the stop loss, if one needs to put the stop loss, needs to be above 837 levels. So one can go short with a stop loss above 837 and a target of 805 on the downside.
Okay. Just quickly want to look at some the open interest changes in a few stocks. So Sun TV seems to be adding fresh short positions to the tune of 10%. You've got LIC Housing Finance, stock's down about 2% right now, but with an open interest change on the short side of about 6.3%. A Z, which is down 2.2%, that stock's adding fresh short positions. And a Titan, though the price cut is slightly more sharp, short positions are to the tune of about 5.8%. And then you've got your banks, the Bank of Baroda, Kotak Bank. These are seeing some fresh short positions getting added. On the other hand, the stocks which are adding fresh longs, Hexaware seems to have added a massive 30% change in open interest on the long side. The stock's up just 1%. Page Industries has added about 20% change on the fresh long side. Mindtree, Axis Bank, Jindal Steel are all some of the gainers in terms of fresh long positions. Anything on an Axis Bank, Amar?
Yeah, looking at Axis Bank, what I see is that Axis Bank in particular, it is still holding firm, because if you look at it technically, the stock is extremely strong on the charts. So I would say the stock has been holding firm, and on the downside, I would say around 625, 630, that's a crucial level of support. Whereas on the upside, again, 660, 665. So it seems that the stock has now gone in some consolidation, because if you look on the daily charts, there is a shooting star formation which clearly shows that a top has been made for the stock, and the stock is now going into consolidation with a downside crucial support coming around 620, 630 zone.
Okay, stay on, Jeman. Lots more to talk about. High valuations may face a test when companies fail to live up to the growth. Maybe we're seeing that with Titan already. And which something, the kind of growth that these companies have delivered thus far. This is in fact the view coming in from a guest this morning, Pankaj Burarka of Renaissance Investment Managers. He also outlined when he spoke to us earlier about why it may be the right time to invest in Indian markets. Here's a small slice of that conversation.
I think it's a good time to invest into Indian equities. After a gap of almost 7 or 8 years, Indian economy has started recovering. We've gone through a very painful period of getting the economy back on track. We had had a long credit cycle. We are at the fag end of it. We've had credit contraction for almost 3 years with virtually single-digit credit growth. India hasn't had such a sluggish credit growth, for a very long period of time. And we've had one of the weakest industrial growth in the last 5 years. The good thing is we are at a point where everything is turning around. So I think it's a good time for an investor who's willing to take a medium-term to longer-term view on Indian equities to get in and build a portfolio. There could be volatility over the next few months, but I think, as they say, volatility is always a friend of a long-term investor. Yeah. So.
Am I safely assuming that if you're getting flows right now, you are using this volatility to deploy it into select pockets? And the argument that the answer that I really want from you is whether you're finding value in deploying money into the mid-cap pockets right now, or are you finding value in deploying money into the small-cap pockets? Because the view coming in from a guest this morning, Pankaj Burarka of Renaissance Investment Managers, he also outlined when he spoke to us earlier about why it may be the right time to invest in Indian markets. And the argument that the answer that I really want from you is whether you're finding value in deploying money into the mid-cap pockets right now, or Are you betting on quality? Because quality started correcting. Bajaj Finance is off about 10%. Stocks like HUN, some of the other discretionary names or staple names have also come off quite a bit in the last few days.
So there's a pocket of market which where value is there. That pocket of market hasn't done well over the last few years, but I think it should do well when you take a medium-term perspective. As you rightly said, what we've witnessed in India and globally is high quality, high growth has done well. There's been this narrow section or a handful of sectors and stocks within those sectors which have actually led this market in the last 5 years. And that's primarily because growth globally has been pretty sluggish, except that last year we have started seeing a pickup in growth. And even the real growth in India has been pretty bad. So these were companies which did well, even in an environment where we had growth headwinds in the real economy. And obviously, when a particular sector or a particular set of stocks do well in a headwinded environment, then obviously we end up seeing disproportionate flow of money into those sectors, and P's do expand. And that is what exactly we have seen. I think it's my view that we have had our own set of Nifty 50 bubble in India, where high quality, high growth has gone to multiples which long-term fundamentals of this business do not justify. So over a longer term, these businesses they cannot deliver the kind of growth that's implied in their current valuation. So either the valuations have to correct over a medium term, or they have to deliver growth which is far higher than what they've been delivering so far. And I think the latter case looks slightly inconceivable. When you take a classic case of a company like Hindustan Unilever, last 15 years, profit CAGR of Hindustan Unilever is 8%. But the stock returns is something like about 18% CAGR. So effectively, a large part of your returns have come from P multiple expansion than from profit growth.
Interesting.
But I think the good thing, as I said, is it's after a gap of 7 or 8 years that the Indian economy is now inspiring confidence. Meaning, while we are seeing all of this currency volatility, just bear in mind, if you go back and see in 2013, when something like this happened, India was the most vulnerable, or amongst one of the most vulnerable. Today, India looks as like a beacon of calm, where there are countries which have been vulnerable, like what has happened to Turkey or Argentina, but India looks one of the most resilient place out there to be. So I think in the last 5 years, we have made a lot of progress from an economy point of view in fixing our macroeconomic imbalances, and probably in the process, we've also executed a lot of structural reforms.
Sure.
And now it's the time to reap benefits of all the hard work that's been done on the economy.
Just one last question before we let you go, Pankaj.
Sure.
Is, when people sit to look at their portfolios, there are people who have, wealth destructors like real estate, telecom, oil and gas, or this aviation, all that's sitting in their portfolio right now. So for such people to sit and, take a look at the kind of money they have lost, is it time to probably book losses into these sectors?
Well, it's really a stock-specific call rather than a sector-specific call. But I take your point, given the challenges we've seen, some of the core economic sectors in India, be it telecom or power, they've become, we've seen huge losses because a lot of companies within those sectors have ceased to exist, or they have not around. Meaning, take a case of telecom. 2007, we had 10 telecom companies and 10 license holders wanting to get into the sector. So it was the hottest sector to be in, right? Fast forward 2018, what we are left with is just 3 companies out, probably 4 if you count BSNL as incumbent. So obviously we've seen significant consolidation that has happened in the sector, and there is a significant transition that's happened from a policy perspective, and obviously we've had a new wave of competition driven by Jio in terms of whatever they have done. So as a result, a lot of companies have not survived in the sector, and the story is similar for power sector or some of the other segments of the core economy. It's unfortunate, but emerging markets, when they go through their growth curve, they do go through these kind of cycles, and India is not unique in that sense. So you feel bad for investors who've lost money in these sectors, but unfortunately, that is how the game is.
Well, some of the names that have just gone off in the last few minutes of trade, maybe bring up a Power Finance Corporation and see if that's corrected a little bit during the course of the day. It's down about 7.5% post the numbers, which weren't the best, but not necessarily in the last few minutes. But the stock is down in the session today. Stocks that have corrected in the last half an hour to 45 minutes of trade. One of them is Schneider Electric. That's down quite a bit. It was actually in the green, is now in the red. So that is looking slightly wobbly. Container Corporation of India has come off a little bit from the levels that it was trading at. We already spoken about PFC. Apollo Tyres is the other one, which is down about 1%. And in the last 1 hour, the selling has gotten aggravated. And Apollo Tyres is down about 4% as well. So these are 3 or 4 names which are looking slightly wobbly over the last 30 to 45 minutes of trade from the NSE 500. Weak names out there. Ashish, any thoughts here? Any stocks? Any of these names that look good for a trade?
Apollo Tyres is looking good, but it has already corrected from a level of around 246. But still, I believe that the weakness would continue. Currently, it is trading at around 231. My first target would be around 229, and the second target would be 226.5. For this trade, you have to keep a stop loss at 233.5.
All right. That's Apollo Tyres. They're down about 4% in trade right now. The lowest point of the day, 231 on the counter. On to our chart of the day. Indian markets have been correcting over the past few days, and while valuations and currency are some of the key factors behind the drop, the room for correction in India is slightly more than other BRIC nations. Jayesh Khilnani is here to tell us why. Jayesh.
Devina, just to give you a brief context, on Friday, the MSCI Emerging Market Index, in fact, entered a bear territory officially because it has corrected more than 20% from this year's high to the current price. And, you know, it has dragged along with itself some of the other key economic emerging markets that we have. So I looked at the valuations and, you know, where they stack up historically, and something really stood out in that space among the BRICS nations that I have considered. So what you have on the screen is the 1-year forward PE and the 1 standard deviation band that, you know, generally these markets trade in. What actually stands out from this is that India is the only BRICS nation that is trading above the +1 standard deviation mark. And on the other reverse side, we have South Africa, which is trading below the -1 standard deviation mark. So, you know, at 2 extreme ends that we have. So there is, which means that India has some room to correct, while, you know, if you are a believer of valuations, South Africa could see some bit of upside. But overall, the view on emerging markets remains on the negative side, because I spoke with Mark Matthew as well, and in a recent report of theirs, they have in fact downgraded the entire emerging market space to a market, market performer from an overweight performer, so including India. So, you know, not looking that great for the emerging markets. But what he cited out was that emerging currencies will likely be under pressure, which will in fact force flows out of emerging markets back into the US, which could lead to some bit of more pressure in the emerging market space.
Jayesh, thanks very much for bringing us that snapshot. Another stock to watch out for is L&T Foods. The stock's been beaten down quite heavy in today's session. At the start of the show, the stock was down about 4%. Now the stock's down 10% at 45. Any technical calls on this one, Amar? LT Foods?
Yeah, looking at this particular stock, I would say the stock has been in a downtrend. Since I would say almost, if you look at it from April onwards, the stock has been on a downtrend. It's trading at half those levels, and still the downtrend remains in place. Looking at it technically, the stock has got some support around 40 levels, so the stock could further trade lower towards 40 levels.
All right, we've just got a viewer query on Federal Bank, whether it's a good time to buy into the counter. Do you want to come in on that one? Ashish?
Yeah, look.
Yeah. If you look at Federal Bank, it is consistently making lower tops and lower bottoms, but currently it is at a level where it has taken a very good support in the month of July. So yes, if you are a short-term investor, definitely you can go ahead and buy this particular stock. Currently, it is trading at around 75 rupees. The strict stop loss has to be kept at 72 rupees. And the first target which can be seen on the chart is 80 rupees, and the second target would be 84. And these two targets would be achieved in the next 2 to 2.5 weeks.
Okay, gentlemen, stay on. Time for a quick break. On the other side of the break, we tell you what dealing rooms are recommending in the session today and then some closing strategies as well. Plus, our fundamental guests will be joining in to talk about, well, some of the losers and what to expect from them in the near term. Stay tuned.
Good news, got a promotion and a damn good raise.
Congrats, beta.
वाह, raise? अब तो insurance policy ले ले.
कौन सी कंपनी से लूं?
Choose वही जिस पर हो पूरा भरोसा.
That's good. But आज की generation wants everything online. Easy premium payment options, loan facilities और wide range of products.
पापा दीदी, I will decide. Just send your links now. तुम दोनों भी ना. Same choice. LIC.
LIC trending with times. 62 सालों से हर generation की पसंद.
Dreamers. They're everywhere. You've met them, been to school with them, worked with them. They didn't seem different. Yet she's the one who surprised everybody. His crazy idea actually worked.
They are no different. They are you. When you take a chance on yourself.
These are the dreamers who found a way to run the engine of the world. These are the entrepreneurs. There is no formula. There is no right place, right time. There are no overnight successes.
But there is toil, there is preparation, and there is tenacity.
There is no end of the road, no obstacle large enough. There's just the vision and the heart that won't give up.
Because Agons of business never stop.
Agons of business never stop. Only on Bloomberg Quint.
September 15th, 2008. The day a titan of the investment banking world fell. An event so unlikely that when it happened, it shook the world economy. 10 years later, the world has picked up the pieces. Or has it? Bloomberg Quint looks back at the collapse of Lehman, its aftermath on India, and the recovery that followed. Lehman, a decade later.
Kerala is tiding over the worst calamity that the state faced in a century. The intensity of the calamity and the losses suffered thereby are unparalleled. A preliminary assessment pegs the loss at around of rupees 20,000 crores. It is a humongous task to undertake various tasks of rehabilitation and reconstruction. Only with the wholehearted support and cooperation of all of you, we can rebuild Kerala. Your contribution, however small, will go a long way in achieving this goal. Please contribute to the Chief Minister's Disaster Relief Fund. We shall overcome.
Back with Countdown right here on Bloomberg Quint. 30 minutes left for the markets to shut shop, and As we look at the markets, we're trading at the lowest point, sub 11,300, 1.26% down. The Nifty Bank 367 points, 26832. Now this is perilously close to the 100-day moving average. If we can get the RSI function on the Bloomberg terminal for the Nifty Bank up on the screen, you will see those that it comfortably broke the 50-day moving average a couple of days ago, the Nifty Bank, and started sliding downwards. As of close yesterday, it was about a few hundred points away from the 100-day moving average. And this line now, if you can see, and let me just go across to the wall and just try and point it out for the benefit of our viewers. This is the fall that we're talking about, the correction that has come into the Nifty Bank. This green line that you're seeing is the 100-day moving average. And now we are perilously close to the 100-day moving average. The key is whether we can take support at these levels or do we break and go down further. The trades, as we speak, seem to be on the short side, at least they were about half an hour ago. The question mark only is whether our experts are willing to put in a further short or an enhanced short idea or a short idea currently at these levels on the Nifty Bank, because that is looking like the worst performing index right now. Very quickly, Amar, would you initiate a fresh short on the Nifty Bank currently?
No, not at these current levels, because 26,790 and 800, that's some sort of support level for Bank Nifty, and we could see some pullback, but overall the trend definitely seems to be on the negative side and it's gaining momentum. So we'll have to watch out for, because if Bank Nifty consistently sustains below 26,800, then it would have next major support level coming around 26,500 level. So that's a 300 points correction from those levels.
In fact, if you look at the RSI as well, which is where the indication of being overbought or oversold, the Bank Nifty is at 33, and the lower range, which indicates being oversold, the signal line falls at 30. In the last 1 year, I think there were a few instances where the Bank Nifty did move but never crossed below the oversold area. So always from a level of 32 or 31, this marker has bounced back up, which is the point that Heyman was trying to make yesterday, that selling may not come in at such low levels. So the open interest spike, who is selling at such low levels? You probably on the contra side actually see a bounce back. So at 32 now on the RSI band, we'll have to wait and watch if this actually turns out and it fructifies to what Heyman said, and if the Bank Nifty bounces from these levels. But Avinash Gorakshakar is also here with us. Avinash, what are you making out of the market?
I think, Devina, clearly, the rupee fall has been the major trigger for the markets to actually get into this kind of panic zone. Our sense is that until we see clarity on the rupee, at least stabilizing a bit and hardening, I would not be surprised that you're going to see this kind of sell-off at least for some more time. I think clearly, import-sensitive companies like oil marketing companies, the airline pack, I think these are companies which obviously would be at the receiving end, and I think you're going to see further pain, especially in their numbers when they report the Q2 numbers. So I think overall, it's going to be a difficult terrain, at least going forward. Overall, I think, unless the market, looks at some sort of rupee hardening, we are not going to see any major uptake, at least in the near term. I think 11,300 or maybe 11,350 would be at least the near term kind of, value zone. But overall, I think it's going to be stock specific, and import sensitive companies are going to be on the receiving side.
I think it briefly breached 11,300 on the downside, and it's just a few points away from that. Today's close is going to be extremely important, because remember, much of your put concentration in terms of creating that support base has been around the marker of 11,300 after 11,400 had been taken down. So they are actually breaching two support levels on the index, and whether it closes or not below that, gives you a bigger bearish signal this time around on the index. 1.2% lower on the Nifty. I want to quickly look at the rupee as well, because in the last few trading sessions, the drop in the currency has been the drop in the markets has been primarily driven by the drop in the currency, the depreciation of the currency. 72.66. This is the lowest point of the day in terms of the rupee versus the dollar as well. So 72.66 on the currency, record low out there. You want to talk about a few stocks, Avinash? You mentioned import-facing companies, but you want to give us a breakdown of what you like?
I think clearly, I think, from the investment perspective, we like companies like Shemaru. I think we have been earlier also recommending this stock. Devina, from the content provider space, they have a very strong kind of track record in terms of the content library and the kind of market which they cater to, especially the OTT market. Our sense is that this is a very stable kind of business and very profitable EBITDA margins. So, the company operates on a EBITDA margin of almost 30% plus. Our sense is that over the next, say, year and a half, I think clearly OTT is going to be a very big growth driver for this company. Eventually, I think, this market is going to see a very strong explosion in terms of the kind of new medium of communication which most of the younger generation, opts out for. And most importantly, the earnings numbers for this company have been pretty strong. Last year, they reported a top line of close to roughly about 480 to 485 crores and a bottom line of almost close to 71 crores. Our sense is over the next 2 years, you could see a compounding effect of almost 20 to 25% on the bottom line. And we could see a profit of almost 110 to 120 odd crores. So clearly, I think this could be a good value buy, provided, the investor is willing to take the long shot and, wait for next, say, 12 to 18 months. But clearly, in terms of the content, kind of bouquet which they have, I think there's no denying the fact that any dip should be used as an opportunity to actually accumulate the stock.
All right, that's Shemaru that Avinash was talking about. But the currency clearly is taking center stage in today's session, along with pain in the markets. Remember, yesterday there was a lot of talks of how the government had actually asked the central bank, the RBI, to boost efforts to support the currency. Remember, the rupee has been one of the worst performing Asian currencies this year. It's dropped to about more than 11.5%. Currently at the weakest point of the day. There were talks of whether the RBI will actually come out with measures including deposit schemes for NRIs or no. But that's all what the market's talking about, and whether or not they go ahead with that is something to be watched out for, or whether or not they undertake and use the dollar reserves they have to curtail this sharp plummet of the currency. But in previous occasions, the RBI has categorically mentioned that they are not here to fix come and stabilize the rupee at a particular level. They're just going to come in as and when they feel that the volatility is a bit too much. But the free fall of the currency right now, deserves some notice on the back of the impact that it's having on the equity markets as well. We've got Siddharth Sidani also joining in right now. Siddharth, what are you going to do with individual stocks now?
Good afternoon. Thanks for having me on the show. Well, wherever we are having a strong conviction. I think we are keeping that accumulation strategy on. Although we understand that macros are a little deteriorating on the back of rupee and bond yield, and some kind of a rate hike is also in the anvil. So all these things keeping together, making market so much nervous. I think it would be completely a stock-specific market, and wherever some of the consumption plays, some of the private banking plays, NBFCs, I think we are very confident on those plays, and we are recommending our clients as an accumulation strategy.
What stocks are you looking at, Siddharth? You said that you can look at accumulating specific stocks. So what exactly are you recommending?
Well, some of the consumption plays like Vitas is one of the stock which we are recommending our investors with a target of 680. As we know that it's a leader in the air conditioning space, even the project business has been doing good. Along with that, in some of the auto ancillary packs like Bharat Forge, which is even a defense play, we are recommending our clients to accumulate at the current levels. One of the stock which is again one of the brands like Phenolix Cable. Here we are also recommending accumulation at this price because with a target of 649. Well, we know that this company is a stalwart, one of the leaders in electrical and communication cables. Company has been doing good. Other part of the businesses are lights, fans, switch gears, switches. So many other part of businesses, we believe the company has been posting good set of numbers. Along with that, we are seeing that this company is expanding towards north and east, where they are a little weak. South and west is quite strong from them. So overall perspective, we expect around 25-26% CAGR growth in profits for next 2 years. So Finolex cable kind of niche plays also we are recommending our investors with a target of 649.
You know, some stronger names, of course, have come off too. Of Mahindra CIE for quite a long period of time now was trading close to 52-week highs in today's session. After nudging those levels again, it's come off about 5.5%. I don't think, the question mark anyways in all of the conversations that we've had with the global guests as well, the conversation is about whether stock-specific buying can be done or no. The question mark only is whether the pressure in the markets that is there right now, can it extend itself, and can we get good quality companies at better valuations as well. So Bajaj Finance, for everybody's opinion, was a great company to buy even at 2,800. But does it mean that, or would it, the question to ask is whether one, you can time it, and two, whether if you can time it, would the stocks be available at cheaper valuations than what they were available then, or what are they are available right now. Titan at 850 was great. It's 820 right now and under a lot of pressure. So a lot of quality names are coming off.
But that's the psyche of the market. Once it starts to drop, you probably were at 2,800 waiting for a level like 2,600. But when 2,600 comes, you question yourself again and say, is this the right level to enter, or whether I should wait for it to come down further in terms and correct itself in terms of valuations? This is for Bajaj Finance.
Yeah, I mean, I think the only debate would be what a lot of people would be contemplating, whether or not these overstretched valuations will correct themselves or not. I can understand normal valuations and therefore the question mark, but overstretched valuations, what do you do there? And that's the question, right, Avinash? That what do you do with the Page Industries, Bajaj Finances of the world, which even after correcting are still about 7.5 times price to book, right? They're not cheap.
No, I think, Neeraj, in these kind of companies, the fall would also be equally sharper, because I think valuations were already trading at premium valuations, and I think the way the markets are behaving, clearly I think you need to have nerves of steel to actually see these prices going down. I think despite the fact that the fundamentals continue to be strong. So my sense is, I think, this is a good time for long-term investments. I mean, clearly for investors who want to take a longer-term call, who have missed the bus earlier. But overall, I think this is going to be a market which is going to test most of the investors. Clearly, premium valuations definitely are going to correct. Our sense is that most of the export-oriented names would possibly get to see some sort of re-rating in their multiples, because clearly the rupee being the way it is, I would believe that most of the pharma, IT, auto component plays would definitely make a kind of margin enhancement in their numbers. So probably that would be a time when markets would closely look at them. I think clearly in terms of valuations for, say, a Bajaj Finance, some amount of profit booking in these kind of markets is quite obvious. I think people would definitely like to take some profit home, in this kind of volatile market.
The profit of which they've not already lost.
Yeah, that too. And well, by the way, we were talking about ITC, or we were going to talk about ITC in the morning. That stock too is down about 3%, and a lot of auto names too have corrected today. Tata Motors, Hero MotoCorp, for example, are down in the session today. Eicher Motors is down about 2% at 28,000. A fair bit of correction. Well, maybe time to look at what dealing rooms are recommending in the session today. Darshan Mehta and Yatin Mota are here with their channel checks. I tend to do this quite often, guys, but Yatin, let's start with you first.
Yeah, probably. I think the market fall is playing, on your memory.
In my mind, yes, probably it is. But let's hear what dealing rooms are saying.
Yeah, so no much of a recommendation from the dealing rooms today, because the activity is quite low. Probably we are looking at unwinding of leverage positions. Probably in the F&O segment we are looking at some massive unwinding happening, and probably PFC is also one of those stocks that we are looking at some long unwinding which happened post the first quarter numbers. Almost 8% down for this one, despite reporting an average quarter which was broadly in line with the market expectations. So this is one stock wherein dealers are expecting further more pressure as we have some long unwinding spending. And Mindtree, that is one stock in the IT space. Of course, the rupee is weakening and augurs well for companies like Mindtree. And also on the basis of F&O trends, dealers do recommend a buy today, sell tomorrow kind of a strategy. But Darshan has a few more stocks to talk about.
Yeah, so Cipla is down almost 2% in trade, was trading much higher in trade. But what we hear from some of the dealing room is that some of the domestic mutual funds are taking positions on Cipla at lower levels. One stock which the street has turned cautious now is Manappuram Finance, trading at record at 52-week 2-week low. It's down to levels of 88. It was trading at close to even 110, 115 a while back, even post the numbers. Dealers believe that the trend has changed on the downside. They expect more downside that will come in. And JSPL is down in trade. It's come off significantly from the highs of the day. It was trading at almost 227, 230 rupees level. But some of the HNIs are actively accumulating this counter at lower levels. The management commentary that's come out in terms of, deleveraging, in terms of, going ahead with their new business, in terms of restructuring, that seems to be auguring well with JSPL.
All right, Darshan, thanks very much for that. I just want to come to you, Ashish, on Mindtree. As a buy today, sell tomorrow idea. The stock's holding up, and dealer checks suggest that you could do that with the Mindtree.
See, Mindtree chart overall is very strong. After such a fall in the index, still Mindtree is able to hold its neck above the strong support level. So definitely there is a strong momentum in this particular counter. So I would definitely recommend to hold on to the stock right now. Someone should not book profits at the current levels. But if someone wants to create a new position or a fresh position, it is not the right time. If the price goes above 1183, then there will be a fresh demand which will be coming in, and that will be a time when it will start a new move. So people who are already holding Mindtree, definitely hold on with a strict stop loss of 1145, and a fresh position has to be taken above 1183.
All right, that's Mindtree there. 13 minutes left to go for market closing. Another stock that we can focus on is a Cummins India. Citi has put out a note. They've raised the target price to about 844 on the stock. This stock has actually rebounded from the day's lows at 753 on the stock price. So there is a significant potential upside of about 13 to 14% on the counter. Their export guidance could be revised upwards post quarter 2, and they're really positive on the business rebound potential for Cummins India. Siddharth, are you looking at this one?
No, we don't cover Cummins India, but in the same space, if I talk about, I think in the capital goods or infra play, which we like, is completely the proxy of infra is, of course, L&T. Some of the capital goods play is also in this company, and we believe L&T looks the most interesting to us, although the stock is hovering around 1300, 1400 levels, but the company has a buyback of 1500 rupees of 9,000 crore. Along with that, we believe that this company has a strong potential to implement bigger projects like Bharatmala, Sagarmala, and other bigger government initiative projects. So we are banking on L&T in the same space.
You track Cummins India, Avinash?
No, I think the management commentary yesterday on the con call was extremely positive, and I think the markets are looking forward for the fact that revival in the capex cycle is going to augur well for the company, especially both on the domestic as well as on the export side. Our sense is that this is a company which is actually a fairly well managed kind of company in terms of the business model structure and in terms of the capital structure on the business. I think very little debt on the balance sheet, Devina, and clearly if operating leverage kicks in and they do get good export orders and the domestic business kicks up, then I think you're going to see a lot of improvement in the ROC as well as on the return on equity. So I think clearly from a longer term perspective, I think this stock is definitely going to hold on, and we could see better numbers coming out in this financial year compared to last year.
Just coming on two banks that I want to ask you about. One is Yes Bank, and the stock that has seen a dip since last 5 to 6 trading sessions is at 315, had gone all the way up to about 370 odd, not reached those levels yet. And Kotak Mahindra Bank, what would you do with these two?
I think Kotak Bank seems to be a more stable kind of play as of now, considering the fact that I think the only overhang is the kind of divestment made by Uday Kotak. Clearly, I think markets are reading into the fact that possibly some sort of divestment from the promoter is inevitable, and that could put a little bit of pressure in the short term. As far as Yes Bank is concerned, I think the markets are yet not comfortable with the fact that Mr. Rana Kapoor, despite being given an extension, has been given a temporary kind of reprieve. So I think all said and done, both the banks look fundamentally solid. But in the near term, I think you could see a lot of selling pressure on Yes Bank. I think Yes Bank could possibly be a little more weaker as compared to Kotak. But I think longer term, both these banks should do well.
Okay. 320, just about time to get in the closing strategies from our experts. Ashish, to you first, your top closing strategy.
See, basically, stocks have corrected a lot, and the fall is vertical. So as of now, I don't want to recommend any particular stock.
Wow. Okay. So are you taking an index trade as a closing strategy?
Sorry, come back again.
Any index trade as a closing strategy?
Yes, definitely. Bank Nifty, just 20-25 minutes prior, I had recommended Bank Nifty to go short. So Bank Nifty is already going down and it is currently near 26,800. If the price goes below 26,800, definitely I would go another lot short, and my target in that case would be 26,710, and in that case my stop loss would be 26,840.
Okay. What about you, Amar? Your top closing strategy?
Yeah, I would say that one can look at India Cement, because this is one stock, if you look at it technically on the long-term charts, is extremely bearish. It did witness some pullback, but again, we are witnessing selling pressure in this stock. So any pullback in this stock towards 117, 118, ideally that can be a good level to short, with a stop loss of 123 and a target of 108 on the downside.
Okay. What else? I think in the last half an hour to 45 minutes of trade, Coal India has had some upticks. Bring that stock up from the levels that Coal India was trading at. There's a bit of a bumper that we're seeing in the stock. What's come off? I think Eicher Motors, we already marked that. Titan, we already marked that. Maruti Suzuki is back to 8,500 levels. Remember, 8,400 or circa were the levels at which, from where Maruti started moving up all the way to 9,400, 9,500. From there, it's down to sub 8,500 yet again for itself. What do the charts suggest here, Amar?
Yeah, overall, looking at Maruti, what we are seeing is that if you look at Maruti, overall there is weakness on the charts. It does have strong support coming at lower levels, I would say roughly around 8,200 levels or so. So I would say that there is still some selling pressure, and the immediate level of support is somewhere around 8,400. So what is likely to happen in Maruti is that we could see some respite, some pullback, and 8,400 to act as an immediate level of support. If that is breached, then we could see 8,200 levels in the short term.
Interesting. Okay, those are a couple of stocks. Siddharth, before we let you go, a word on Maruti Suzuki.
Well, a strong franchise. We know it's a portfolio stock. So some of the months, like the last month, was little different in terms of sales numbers, were little tepid in nature, and that is why we've seen the reaction in the stock. But the kind of product profile it has, the kind of launches they have for next 2 years, let's not get bogged down by the stock price correction a little bit here or there, or a one-odd month miss in terms of sales numbers. I think it's a portfolio stock, and one should keep holding it with a long-term perspective.
Okay. We'll let you go with that, Siddharth. Thanks much for taking the time out and joining us and giving us your perspective. Appreciate your time. Well, that's the view on Maruti Suzuki. What else? The losers in the session today at the broader end of the spectrum. There are a clutch of names which have corrected quite strongly on the large cap space. We already mentioned it. But look at the broader end of the spectrum. Hathway Cable, which was a runaway hit in the last few days, is down about 8.5%. There's weakness in NIT Tech, down about 6.5%. Select mid-sized technology names too have come off on the session today. So NIT Tech is one example, of course. Mahindra CI is down about 5.5% too. Apollo Tyres down about 5% as well. So, yep, auto ancillaries, that entire lot seems to be under pressure. Avinash, by any chance, did you get a chance to look at the PFC numbers? That stock has been clobbered after the numbers came out.
No, I think numbers were not all that bad. In fact, Neeraj, the numbers were average, but the way the stock has actually been beaten down, I think it's a little surprising considering the fact that these kind of average numbers were more or less factored in by the market. So clearly, I think what kind of management commentary comes out, and clearly what kind of growth numbers actually come out in the forthcoming quarters is going to be important. But overall, I think it looks as if the stock has been beaten down out of shape much more than what the numbers actually indicate. So I think it's a little more to do with the fundamentals. I would believe that there is something else which the market is worrying about, which probably I think we could probably come to know once the con call and the management commentary is out.
In fact, Sanjeev Basin was pretty contrarian on these power stocks, REC, PFC.
And the power generators as well.
Yeah, he wanted to go long on them. He felt there's a lot of value in them. But there are a lot of stocks actually at their 52-week lows as well. If you've not already covered them, you've got a BPCL and HPCL at 52-week lows. Bharat Electronics is moved to the 52-week low. Manipura Finance, GIC Housing. The list is quite long actually. And HDFC AMC obviously post its listing. This is the lowest we've seen it at 1611. Which brings me to the point, and if Siddharth is there, he isn't there. He isn't there. So Avinash, to you, HDFC AMC at 1600.
No, I think clearly, Devina, I think somebody who's looking at a longer term kind of positioning in this sector definitely should, use this opportunity to actually get into HDFC AMC. I think although the stock may, look a little weak as of now, I think considering all the asset management companies, it's one of the most profitable company with the best ROEs. And I think, as long as they maintain an ROE of at least 40% going forward also, I think the markets would definitely look at giving it a kind of re-rating once the market stabilizes. I think clearly in terms of the SIP and in terms of the market share, they definitely look well positioned. So I think somebody who's looking at a slightly longer term horizon should actually use this as a good opportunity. Although I think I wouldn't be surprised, the stock may not actually go below 1600 in a jiffy. I think you'll probably see some value buying coming soon.
Okay. Good to pull up an ICICI Lombard and see how that stock has been trading, because it's been a pretty strong stock and a steady stock in the last 8 to 10 trading sessions, managed to hold fort, but today looks like some amount of weakness has come back, and not much in terms of the actual decline. The stock is actually on a 1 month basis up 14%. Compare that to what an HDFC Life has also been doing in the last 1 month. ICICI Lombard at 905 right now, and HDFC Life also at the lowest point of the day picking up, but 1 month change down about 4%. Avinash, between the two?
I think in the morning, Devina, if you would have observed, ICICI Lombard was definitely trading on the positive side. Our sense is that, I think the new motor policy norms would definitely benefit ICICI Lombard, and clearly, from a slightly longer term perspective, they have a very strong business model. So I think any correction, say below 900 odd rupees, should be used as an opportunity to actually accumulate. I would not be surprised that considering the kind of improvement in the business, you could see stronger earnings trajectory numbers coming in for the second and third quarter, and FY19 should be a lot better than the previous year.
Avinash, thanks very much for joining. Really appreciate you taking out the time and joining in with your views. We're just about 2.5 minutes away from market closing. Neeraj to take us through what's moving. Neeraj.
Well, everything moving on the downside, Devina, though. Sadly, that's the truth. 1.3% lower for the Nifty Bank, about 1.5%. And mind you, the world markets are not that unhappy a place. So is our own doing, pretty similar to what happened in trade yesterday as well, wherein the world markets were okay, but we had issues of our own. The mid caps and the small caps too have corrected, about 1.5% lower for both the mid cap and the small cap indices too, looking slightly wobbly. Let me take you through the large caps, and then Devina will take you through everything else that moved around. Coal India, a bit of a late spurt leading to the stock ending marginally in the green. Aside of that, look at it. I mean, yeah, M&M maybe 1%, but everything else less than 0.5% in NTPC, Infosys, just 6 stocks in the green, and that too barely, which shows the extent of losses. But look at the losers. Titan, almost 5%. Tata Steel, Tata Motors, so the Tata Group stocks dominating the losing side. Power Grid down about 3.5%. ITC corrects about 3% in trade, and autos by and large. I mentioned Tata Motors. Hero MotoCorp is down 3%. Maruti is somewhere in that list too, down about a couple of percentage points. There is weakness in ICICI Bank from amongst the banking space. Cipla on the pharma pack down about 2%. The list is long and pretty similar to what happened in trade yesterday as well. Lots of losses, and the mid caps not spared either. Market breadth arguably at the worst part of the day, Devina.
Definitely, Neeraj, and a few stocks which have actually borne the brunt in a bigger way with the kind of sell-off that we've been seeing. We're 1 minute away from market closing, so just quickly start to wind up in terms of what's been happening in the broader markets and the pain points that we've been seeing. So NIIT Tech is down about 6.5%, trading at 13.11 right now. That's the lowest point of the day. The stock started off pretty okay, but then as you can see, petered off by the close of trade. JP Associates, that's one heavy knock as well. The stock's down closer to 5% in intraday intraday trade. AstraZeneca Pharma, Marks & Pharma, so no respite within the safer haven stocks as well. That stock's lost about 4.5%. Marks & is down about 5%. Wellspun Corp, Jet Airways and Suven Life. These are a few other stocks which have given you cuts of about 3.8 to about 3.5% apiece. Jet Airways at 269 now, and a Suven Life, it stagnates now. You've seen last few days where the stock has really outperformed the broader market in its own space, and the stock today is giving up about 2.7%. Amongst the stocks which are doing okay for themselves and in this falling market have managed to hold fort include the likes of Praj Industries. In fact, closer to the highest point of the day now for Praj, it's at 96, up about 3%, and that's the market close for you. Nifty closing under 11,300. So that's going to be a big one in terms of a technical breach. This Nifty is down 155, but this is obviously not the closing. This is the last traded price before we ended shop. Sensex under 38,000, now closing in fact around 37,000, 37,386 on the Sensex. Few other stocks, Zensar, Century Ply, Page Industries is up, holding fort. You've got Chambal Fort, RBL Bank, Vijaya Bank and Andhra Bank, which seem to have been okay and probably shielded themselves against this kind of carnage that we've seen across the board, Neeraj.
Yeah, looked weak. There's no two bones about it. And, just wanting to get Europe up first before we get into the highlights of the trading day today, just to see if the European markets worsened a bit during the course of the show or no. Just let's get FTSE, CAC, DAX out there. Oh, actually they did. Yes, they started off, when we started with the show, they were flat. Now down about over 0.5%.
FTSE was actually in the green, I believe, when we started off the show.
So the world markets too looking slightly jittery in trade. Maybe that only exaggerated the selling that we got. Bring up the market breadth. We would have ended at the worst part of the day. I have no doubts about it. I'm guessing the turnover too would be on the higher side. Well, the yawning gap here on the market, but this is actually worse than yesterday, Devina. Yeah. Almost 3:1.
Stocks, yeah. 1,200 stocks versus 400 stocks, and you actually did see the start of the trading session was actually not all that bad, though the actual increment in terms of the change on the index was not much. It was flattish, but still a positive bias. But the broader market outperformed the index in the start of the trading session, but towards the end, a clear cross, and the gap just kept widening towards the last half an hour to 1 hour of trade.
Yeah, it has looked slightly weak, and the turnover, Devina, we were about 5 lakh crores at about noon. Wow, look at that uptick in the NSE F&O turnover. This is high.
This is high, and even for the cash market. So over the last 7 days, average has been closer to about 34,000 odd, around that figure. So this is on the higher side. But surprisingly, on the BSE cash, which is usually about 3,300, 3,400, that's come down. So much of the action actually focused mainly and primarily on the futures and options side. If you notice, the Nifty itself, in terms of the open interest change, was closer to about 27, 28% by the end of the trading session. So the open interest built up mainly on the short side for the indices, and even the bank Nifty added on to that.
Yeah, well, so fair bit of short position added yesterday too on the Nifty Bank, and that continues in today's session. The contributors list, the gainers are not worth looking at really. I mean, hardly any gains there, but the losers, and virtually the same set, Devina, but for the fact that HDFC is missing from here.
With role reversal, actually, the last few days, Reliance has actually been the top contributor on the losers, but not so much so in today's session. Today, obviously, HDFC Bank, which is, I think, the third heavy-weighted stock after an HDFC Limited. Reliance is, I think, 9.5% weightage. HDFC has closer to about 5.7% weightage.
Yeah, so looking weak and wobbly, and the heavyweights contributing to the selling as well in today's session. You virtually didn't have any gainers at all. Well, final thoughts from our experts. Ashish, what are the levels that you would watch out for in the immediate aftermath of what's happened over the last 2 days, either for the Nifty or the Nifty Bank?
I would like to talk about Nifty. On the daily chart, Nifty has created a gap in the month at the end of July. So I think that gap has to be filled up. So I am expecting the Nifty to come down to a minimum level of 11,175. So currently we are 11,280, 85 odd levels. So I am expecting a further 100 points fall in the next 2 to 3 trading sessions.
Okay. Amar, what about you?
I would say that the fall that we've witnessed in Nifty clearly shows that there is further selling pressure which is likely to be witnessed in Nifty. And technically, if we look at it, the next major support zone for Nifty comes around 11,080 and 11,100. So those levels could also be tested in the near future. Whereas on the upside, 11,450, 470 would act as an immediate level of resistance.
Okay, gentlemen, appreciate both of you taking the time out and being with us during the duration of the show. Thanks so much. And well, let's hope we have better trading days ahead, because today was slightly tough, especially in the last 1 hour of trade. Also coupled with the kind of cuts that we saw at the global markets.
Well, definitely looking at the, how Europe is stacked up in terms of its positioning. We'll have to wait and see what cues come up from the US as well before we see. Because Asia, over the last 3-4 trading sessions, the setup for our trade has been pretty weak.
Yeah. Well, let's see. Tomorrow's a new day in a truncated week. But thanks so much, viewers, for tuning in on this leg of Countdown from Devina and me, a team that put this show together. Thanks so much for watching.